Okay, let's refocus from one management to the other. We have the management of Birlasoft, Mr. Angan Guha, the CEO and MD, joining us on the show. Mr. Guha, hi, morning, and thanks for your time. Let's start by talking about your key growth drivers that were BFSI and the life sciences segment this quarter, while manufacturing saw a little bit of weakness. What's weighing on the manufacturing demand, and by when are you expecting a recovery here?
So manufacturing business currently is going through some amount of structural issues with us because of the uncertainty. Most of our manufacturing clients are doing well actually, but because of the uncertainty in terms of the tariffs, in terms of the future outlook, they have had certain stops in terms of the spend on IT. I believe that the manufacturing business will continue to be under pressure even in Q3 as well as Q4. But I strongly believe that Q1 of next year onwards, the manufacturing business will get back to growth.
Right, and your margin gain, that was pretty steep versus last year. Is this level of it going sustainable going forward, or should we expect some sort of normalization?
We've delivered a great quarter when it came to our EBITDA margins. As you've seen, our EBITDA margins have gone up from 12.4% in 1Q to almost 16% in 2Q, which was terrific performance. But this has many facets to it. One, operationally, of course, we've delivered a good quarter, but we've also had an advantage due to some one-offs as well as due to the exchange rate advantage that we got. I feel our sustainable operating margin will be in that 14% range. But look, our job will be to execute during the quarter and see how we can improve from there.
Okay, and Mr. Guha, let's talk about your client count that has dipped to 239 from 247 due to tail rationalization. Should we expect further pruning, or is the client base now stabilizing?
I think it is more or less stabilizing now. We will continue to work on some of the non-profitable relationships or accounts that we have. We will continue to prune them. But I think we are getting to a position where most of the tail account rationalization has already got done over the last, let's say, 24 months. So we're feeling pretty comfortable that the kind of clients that we serve now are the clients that we want to serve going into the future.
Right, and you recently appointed a new CEO for the Americas to accelerate growth. What are the immediate priorities for that market, and where's the biggest opportunity according to you?
So Komal has joined us, as I'm sure all of you have seen our announcement earlier, and Komal joins us from a tier one, consulting and IT services business. He brings in about 28 years of experience, so we are very excited to welcome him on board. And now, as you would have seen, that one of the key things for our success going forward is to deliver growth. So clearly, whether it's Komal or the rest of the management team, our focus will be to look at pipeline, improve order booking, and continue to deliver growth. At a fundamental level, I think the company is doing well. We are generating good profitability. Cash flows are strong. We continue to be debt free. So the fundamentals of the organization is very good. So the entire focus for Komal and the rest of the leadership team is to really focus on growth and drive growth for the company.
Right. And lastly, Mr. Guha, with a TCV of about $107 million this quarter, it is slightly on the lower side. Given this, what's your FY26 growth aspiration and deal pipeline? And if you could shed some light on your order book.
Order book, you should always look at from a year perspective and not from a quarter. This quarter, though, I appreciate that our order book was $107 million, and that was because two deals which were signed off just because of the paperwork, we could not report it this quarter. That will show up in Q3. Our endeavor is to build more pipeline and close more orders so that we can deliver growth in Q3 and Q4. I can only tell you that H2 for us, both on the revenue side and the order booking side, will be better than H1.
Right, great to hear that. Thank you so much for your time today. And on that note, we're going to also wind it up on this edition